Hello, and welcome to National FinTech Organization. In this next installment in the series NFO's Growth Garage, AgTech, Agriculture and Technology. Today, we'll hear from Sean Traynor of DataSeers, Alex Edquist of Good Agriculture, Carter Malloy of AcreTrader, and Scott Sartor of Croptell, as they explain AgTech and discover the opportunities this market has to offer. All attendees are in listen mode only, but the chat feature is available at the bottom of the window for comments and questions. Please give it a try now and let everyone know what part of the world you're connecting from. And as we go along, add your questions for our panelists. This session is being recorded and will be available on demand within the next few days on the NFO's YouTube channel. And now I'd like to hand it over to our moderator to get started. Sean?
Thank you very much. So hello, everybody, and welcome to today's NFO Growth Garage, where we're going to discuss FinTech and the AgTech world. My name is Sean Traynor, and I'm the Director of Business Development for DataSeers. We're an Atlanta-based FinTech that utilizes transaction data to provide banks and FinTechs with fraud, compliance, reconciliation, and onboarding solutions. Now, before we get started, I wanted to remind everyone that we'll be taking questions at the end of our discussion, time permitting, of course. If you'd like to submit a question, please enter it into the Q&A box that you may find at the bottom or to the side of your screen. So in 2023, FinTech was a $180 billion industry with more than 30,000 FinTech startups. And that growth is spreading into the agriculture space. Currently, agriculture as a whole is a $1 trillion industry. The AgTech market is expected to grow from the 2020 figure of $9 billion to more than $22 billion in 2025, a compound annual industry growth of 20%, with FinTech being a major part of that growth. Historically, agricultural banking, lending, and insurance has been left to only a few businesses. Well, that's changing now with the introduction of new companies that are bringing their FinTech experience and business acumen to the AgTech market. Today, we've gathered a group of panelists that are making waves in the AgTech FinTech market, and I'm excited to talk with all of them. Each of our panelists have a very unique solution, so to get started, I'm going to introduce them and give each of them an opportunity to tell us about our organizations. So Alex Edquist is the founder and CEO of Good Agriculture, a startup that supports regenerative farmers with business services so that they can do what they do best, produce nourishing food and steward the land. Alex was previously an engagement manager at McKinsey & Company. She was also a business manager for the Atlanta Committee for Progress, where she launched the Center for Workforce Innovation with diverse partners, including Atlanta Technical College. Alice has a master's in economics from the University of Georgia. Go Dogs. Alex, can you tell us what Good Agriculture is and what problem it solves with a bit more detail?
Absolutely. And apologies to take you through kind of the multiple steps of the problem that we're trying to tackle. But Sean mentioned something called regenerative agriculture, which may be helpful to define at the beginning here. So it's a way of farming where you cultivate the whole ecosystem rather than one or two cash crops. And so it's much better for the environment. It actually helps sequester carbon and fight climate change. The food is healthier, and there's also emerging evidence that it can be more profitable for the farmers. And so one of the big trends in agriculture right now is pushing farmers towards these regenerative agriculture practices, as everyone tries to meet their sustainability goals and make sure that we can feed all of our billions of people for thousands and thousands more years. Given the things I just said of like, it's better for the environment, the food's healthier, and it's more profitable for the farmers, you might think, why does there need to be a push for this? Like, shouldn't everyone already be doing this anyways? And that's actually the exact problem that Good Agriculture was born to solve. So one of the challenges of our current agricultural system is farmers have a lot of demands on their time. Most of them are small business people who are doing all of the farming by themselves, but then they're also doing everything else that goes into running a business. So they're doing all of their own finances, all their own sales and marketing, all their own hiring, all their own logistics and their legal compliance. And it's just a very long list. And so what Good Agriculture is we are the scalable corporate back office for farmers so that they have more time for what they're good at, which is the farming. And the majority of what we do for farmers is financial management. So think of us as like the air CFO for farmers.
Carter Malloy has also joined us. Carter is a founder and CEO of AcreTrader. He grew up in an Arkansas farming family and has a lifelong passion for agriculture and investing. Before AcreTrader, he co-founded a successful global equity investment firm after he served as a managing director with Stevens Incorporated. Carter has led AcreTrader to exponential growth, successfully raised over $60 million in Series B funding, and has grown from 20 to 80 employees across 2 business divisions, which include AcreTrader and Acres, a land research platform. Carter, thanks for joining us. Can you tell us about AcreTrader and what problem it solves?
Yeah, AcreTrader is about a 6-year-old business now, and our approach to the market is really farmer first. The farmers, similar to Alex, who's helping them run their finances, access to capital is an important thing for them to grow their business. Most farmers have fixed economies of scale, fixed expenses, real economies of scale within their businesses. So we act as effectively an equity financing mechanism for them to be able to buy neighboring parcels and grow their business. For the investor, so we're a marketplace, right? For the investor side there, the investors can add farmland to their portfolio through a very easy to use online platform and invest anywhere from $20,000 to $20 million if they so have it and want to. So we likewise provide a solution for investors to access this farmland market, to participate in rural America, and to support farming. So AcreTrader at its core is a farmland investing platform connecting capital with farmers. Beneath that, we've then launched a data product which lives in a separate domain at acres.com. And that is a land intelligence platform to help understand and value land. So a lot of the tools that we had to build for our own business, we've now rolled out to the public. We've got folks that come and use a free version, some pay for it, but I think we've got over 300,000 subscribers to that in its first year. So very excited about the ramp up of that data product. Again, in all capacities, our goals are to bring transparency, liquidity, and access to what is a multi-trillion-dollar asset class within U.S. farmland.
Awesome. So we also have with us Scott Sartor, founder of Croptell, who grew up working in production agriculture with his crop consultant father. Croptell was born from his experience presenting data to banks on behalf of farmers in his role as a fractional CFO. He's spent his career in commodity trading and risk management, agricultural finance, and in AgTech. Croptell works with the U.S. community banking system as it lends to and supports farmers who feed and clothe the world. Scott, can you introduce us to Croptell and tell us how it's helping farmers?
Absolutely, Sean. Thank you. I'm very glad to be here today with Carter and Alex and the rest of you. And thank you to the sponsors. Thank you to the NFO. This is a great format and really glad to be here. So Croptell removes pain points in the lending process for crop farmers from the application all the way through to financial reporting and covenant reporting. We make it easier for the farmer to do through his bank. So banks are our customers. We supply them with the tools needed to distribute to the farmers to basically be really efficient and guide their farmer with products and technology and data towards a better farming and finance experience. So we're a data science database company, and we're starting the onboarding and not just letting the loan application stop there. We basically collect data, turn it into a benchmarking and predictive analytics platform, and then the banks will use that immediately upon receipt of the loan application process. So we're really excited to kind of jumpstart the application process and give bankers insights into their farmers that they may not have ever had before.
Scott, what would you say? Why is the topic of AgTech so interesting and relevant now?
It's a great place to start. So first of all, I'm going to go to what an ag person goes to. Like, there's a certain romanticism to agriculture. I mean, you look out, green fields, cattle in the pasture, sheep, baby goats. Who doesn't love to watch a baby goat video on YouTube? So it's fun stuff. But here's what we've done historically. We want to feed the world. We want to do a good job in farming, but the technology is really ramped up into the modern sense now to where we can do that exponentially. So like that rich history there, the innovation, and now we can optimize with technology how to be profitable, sustainable, like Alex was talking about, helping farmers build profitability. in a way they've never been able to do it before with platforms like what Carter's doing. So like that's where that's why it's interesting now. And plus, agriculture is not it's an old industry, but it tends to kind of be the thing that U.S. consumers look to last. I mean, we go beyond Trader Joe's and Starbucks here. I mean, food, coffee, that stuff we've been produced, it's changed drastically how that's been produced, and it's still going to rapidly change. So I think it's interesting to people. They want to know where their food comes from. They want to see that farmers are real and that farmers care about producing quality food and fiber for them.
That's interesting. Carter, what made you interested in creating a product for farmland?
So I spent a dozen years of my career in professional investing in equities, but in the background, been investing in farmland, and I grew up obsessed with it. My dad's in farming, so always been a part of my life. And what I found so fascinating about this industry, and still do, is just one, how vast it is and how truly large it is, and yet how little modernization within technology, how little capital formation is really taking place professionally, how what a small amount of it is institutionalized and supported by real capital flows. So there was a real opportunity to help bring some of that to market. So on one hand, like, found it super attractive as a market itself. On the other, the market itself, and I think we'll probably talk about this later, is really difficult, right? It is very antiquated, very it doesn't necessarily work in the same way of so many other industries. Business cycles are a good example. You got one shot a year to sell a farmer for maybe a couple of months before they're back to work and not talking to you about your product. There's an appropriate amount of consternation or consideration around when outside players come into this market as well. So the easiest example I can give there is I lived in San Francisco for a while, and before founding this company, I moved back to Arkansas. And it's a big part of the reason, like, you need to be from Arkansas to call a farmer, right? It's not, or from a rural area, right? Calling them from SF or from Manhattan is not going to fly.
I could appreciate that. Alex, how about you? How did you decide to get into AgTech?
Yeah, so my story is not as clear as Scott's or Carter's. So I have no background in agriculture whatsoever, other than eating food most days of my life, which I think everybody has done. And I, to echo what they were saying, like, it's hard to find an industry where there's more white space and potential impact than agriculture, because, I mean, what other industry has a bigger impact on our health, our happiness, like our environment, and also where the tech penetration is just not as advanced in so many other industries. So there's just a ton of opportunity there. And I mean, for me, my favorite part of this is just working with the farmers. I mean, as someone who has a total black thumb and like would have starved to death if we were all, in an economy where everyone had to farm, like what these folks can do is just so amazing. Like, they are all kind of mad scientists on their own farm and figuring out like what works for their specific context. And I just learn so much from them every day.
So I know you said that there's a giant white space in AgTech versus other technology centers that sectors that you've been involved with. Can you go into more detail about that?
Yeah.
The differences between other technologies versus the AgTech?
Yeah. And I think to do a little bit of myth busting here, I think there's a perception of like, oh, farmers are just like stodgy old guys who hate computers. Like, that's why there's not tech adoption on the farm. But that's not really the case. I mean, I spent a lot of time in kind of industry 4.0 areas where you're like, trying to optimize a manufacturing process or a mine or something like that. And the part of the problem with agriculture is it's just a lot harder. I mean, it's a biological system. And so even if you think about having something like, a camera looking over what is being produced and giving you good data about that, like, that is a lot easier to run in a manufacturing plant where like every piece should be 100% the same. If something's 10% off, go look at anything growing, like, it's all different. So part of this is it's just taken the technology a long time to catch up to these kinds of contexts. And then the other thing is what Carter was highlighting around, a farmer's got one shot a year to make money. And so that leads to a very rational risk aversion of, if you come to me and say, I've got this like cool new thing, but also if it fails for some reason, like, you've lost your entire crop. And by the way, you've got a ton of debt on the farm probably. So like that probably is the end of the farm. Farmers are really innovative, but we have to figure out like, how do we enable them to experiment in low risk ways where, it actually makes sense for them to be innovative.
Interesting. Carter, do you want to weigh in on this? And afterwards, Scott, maybe you could give us some insight as well?
Yeah, I think I'll echo Alex there a little bit. That it is idiosyncrasies abound within this market, right? And so there are both real opportunities and real challenges. We do find that if you're selling something to a farmer, it is really important. Ignore the service providers and the rest of the ecosystem, which is perhaps moves a little bit quicker. But the farmer's getting hit once every other week with some new agricultural technology, and so I think where we have a little bit of advantage in this world of financial technology is that we're presenting often solutions for that farmer, things that can help them move their business forward and put money in their pocket rather than asking them to pay us for something. Which is, I think, one of the brilliant components of Alex's business, in the way that she and her team have discovered this market, is by offering, hey, we can help you find grants. Which a heck of a way to start a conversation is, hey, I might have some money for you. And so I think what we've seen is a lot of companies coming in from without that context, that empathy, or that understanding, using Alex's approach. I think is a really good one. And go with their hand out, and they don't get hurt often. So I think that is one of many real idiosyncrasies within our market, within banking in particular. Then, and where all of us have some focus and some real customers, it is also very, in a different way, very, very slow. Well, you think regular banking is slow, agricultural banking is that much slower in terms of adoption of technology. Sometimes for good reasons, it's not necessary. It's not as intensive a data processing gig, as an example. So there's real opportunity, but certainly I think having that industry depth and knowledge, and use Scott's case where he's got deep historical relationships, I think really helps to crack into this market.
Scott, do you want to weigh in?
Yeah, I love what both Carter and Alex said. They basically are saying, we can help as an ag fintech help extract ROI from farm data, like we've done it. So precision agriculture is something I'm sure we've probably said already on this, but there's been a lot done in the field with tractors, and Alex implied there's lots of visual imagery devices. You can take a picture of a weed, identify it, and then kill it in the same, like within seconds. Like that type of technology is there, autonomous robots. So we've done a lot. We've seen billions of dollars invested in precision agriculture, AgTech in the field. How does that relate to a financial manifestation on the farm? So I think that's exactly right. The other thing I would put in is how it's different. So there's a lot. Every business has risk. Farmers' risk is very volatile. So farmers have to make hundreds of decisions a day, a lot of times, about risk, about what to do next. You've got weather, you've got commodity price risk, you got insect risk, and these risks are very hard to quantify and define. So data and technology can help wrangle those into more of a defined platform, or defined KPIs, so farmers can actually do actionable decisions off of them. So, like we've heard that a lot in regular business, but really, the people that are on this, watching this, like agricultural risk is huge. Markets change every day. We have 6 inches of snow here in Mississippi where I live. I mean, that doesn't happen very often, but that sort of weather events really affect farmers, say more than even like a bicycle shop, or an ice cream shop, which loses sales, but they don't lose their livelihood sometimes if there's an extreme weather event. So that's that. And then there's a relational aspect. Relationships are great. What we've got to do better at in this is an industry, and why it's different, is learn how to leverage the technology with the relationship. So we're supporting the farmer as FinTech's, as banks, is partnerships with fintechs and banks, and how we're supporting the customer in the relationship and allowing bankers, say, to sit down and use the technology to leverage profitability for the farm. So I think that's what one of our goals is to really support the banks as they work with their farmers, so the farmers can extract ROI through their data.
So I think this panel is terrific because while you're all in the fintech space and you're all working with AgTech, you all have different approaches to helping the farmers. And you guys have all expressed some challenges that you have faced, but since you're all working with the same people for the most part. I mean, we're all working with farmers, like at a different angle. The challenges that I've heard so far are, Carter, you had mentioned, I don't want to use the word street cred, but I can't think of a better term to use to describe that. And I can appreciate the weather component to it, but I would love to hear about any other challenges that you guys see. Carter, starting with you, if you don't mind. You're working with farmers and investors. Are there specific challenges that you have?
I think within our business, being a two-sided marketplace presents extra challenges always, because we're dealing with, at all times, the intense challenge of making sure we do right by both parties, right? Making sure that we create a win-win for both an investor and a farmer, and positive outcomes for both. As we scale the business, and you do that across 100 farms and 10,000 individual investments, managing that appropriately, setting expectations appropriately, becomes quite the challenge. So one is just that was a long way to say running a two-sided marketplace is its own real challenge, because you're running two businesses effectively. But outside of that, the timing of the market is always important in terms of it, for us dealing with land finance. There's real seasonality to it, and then there's real just timing of dealing with third parties that may move in time period that they consider fast, months and years, and we're looking for days or weeks. And so appropriately setting expectations in all those types of business relationships has been important for us to try to get right and over communicate. We still don't all the time, but it presents a real set of challenges, and one that we focus on quite a bit.
Yeah, you work with Croptell works with farmers and banks. What specific challenges do you see? I mean, I would see those as, I don't want to say completely different individuals, but I'm curious what challenges do you have?
Yeah, so it's good. It's a good question, and I kind of alluded to it in the last. I'll expand a little bit, but I think we kind of have to be data wranglers. Our products probably have to be really good at receiving data and helping like farmers. Just like Alex said, her platform helps farmers be better at finances, and like that's what we need is like to receive that. Like a bank needs to have that data and not rely totally. Like Alex said it too, and Carter said it. Farmers want to farm. I mean, that's what they want to be doing. So if we're supplying them with products and services around our products that take the burden off of them, that's the best thing that we can do. But it is a challenge in some ways getting them to let go of certain aspects of their operation. So that's one challenge. The other one I see is like adoption, just strict adoption. The sexy side of farming is what's going out in the field, that romanticism. Since farmers want to farm and they don't want to sit there and, like I say, they don't dream of spreadsheets. Okay. Like we have to go and help them extract that data. So, or extract that value. So that the adoption curve, like farmers are good at adopting in the field. Banks are good at looking at credit analysis. There's a gap there. So like that adoption curve, that's going to be a challenge for the industry. Like how soon are certain tools adopted, and how soon can all the data and trillions of terabytes of data from precision agriculture from the field flow into the banking environment, in the fintech environment? That's going to be a challenge.
It sounds like it. Alex, how about you? You're working directly with farmers and helping them find grants and helping them with their, I would say, that their individual farm finances. What are the challenges that you're facing?
Yeah, I actually want to echo back to something you said earlier of like, we're all working with farmers here, but farmers are a very diverse group, and agriculture is an interesting industry. And sorry, there's construction noise going on behind me. There's, depending on what they're growing and where they are and what their model is, like they're almost entirely different customers. And so we really focus on the kind of smaller to mid-sized farmer. But even in that group, like there are folks who, when we meet them, they like can't even tell us if the farm was profitable or not in the last year. And then we also have customers who were like digging into every single number we send them and like really want to like, get all the meat out of all the data. And so designing a product that meets all of those diverse needs is one of our biggest challenges.
Okay. So one of the things that I think about with farmers is the innovation that's necessary to be successful, right? I don't want to say to survive, but that might be the right word to use. So it's always been a cornerstone of farmers, from new farming methods to improvements in tools and technologies. I read a story recently that talked about scarecrows with lasers. I don't know if it was true or not, but I read about, anyways, we'll leave it at that. But I think about that culture of innovation, and I'm curious how it plays into the AgTech, FinTech market. I mean, Alex, do you see this spirit of innovation impacting the AgTech, FinTech market?
Yeah, I think, like I said earlier, farmers are super innovative and they love to try stuff. And so really the challenge for us in AgTech is how do we help them experiment and try something new in a way that they feel like isn't putting their annual harvest at risk. Like we have some customers, I mean, like one of them is trying to figure out how to farm in the deserts of Arizona without water. We've got others that he like literally has a science lab on his farm. It's like make his own compost. He's like testing the pH and like the fungal activity and all sorts of stuff in it. So, I mean, that's what they're doing every day. So, this is a very innovative bunch, and they're so close to what they're doing. And if they see that something's working, like they will adopt it quickly. But like I said, it's that risk tolerance. That's the challenge, just by the way that the industry is structured.
Scott, you've had to use some innovation to come up with your own product. How do you see innovation working in AgTech with what you're seeing personally?
Yeah. So foundationally, like Alex is right, farmers are very innovative. I mean, starting at the plow, jumping to the cotton gin, jumping to mechanical tractors and equipment. Like we've always innovated in the field. What we're getting better at is innovating in the office. So that adoption that we just talked to, I'll throw back to that. Like that's kind of where all three of us are facing probably some sort of a challenge, is getting farmers to adopt. But the good thing is we all have these cell phones, and farmers are looking more for mobile and cell technology that'll get them there. And so we have to be really quick and nimble, helping them on board with tools like that. And then I think we have to lead them. Okay, so we need to build new frameworks for how to, like Carter's built that with AcreTrader. It's like, how can I get better and make useful equity? I've got equity in my land. How does that really work for me? Like that's huge. And Alex with Good Ag, like not just giving the farmer a set of technology to do books. Like you can get a grant because you've done this, and your data will work for you in this way. So like these are important things. We've got to lead them by solving problems, and that's critical for adoption. And which is the other problem.
Carter, how about yourself as far as innovation that you're seeing?
Yeah, I think what's important is framing a farmer as a business person, right? Just damn near every farmer you ever meet has a pretty good sense of their P&L, what's going on in their business, what labor is required, what machinery is required, what their yields are. So I think often folks may get a picture of somebody like chewing on a piece of wheat, but successful farmers are absolutely successful business people also. And so you have to think of each farmer as being the CEO of their own business. And when approaching it in that framework, it's frankly, like a little bit easier to identify their problems and where innovation is necessary to actually help move their business forward. They're not necessarily concerned with like the next attractive looking visualization of their farm, or how great your data analytics team is. What they're concerned about is how are you going to impact my business? And so I think we're seeing quite a bit of innovation around that thematically. But quite frankly, we still see lots of market entrants approaching a farmer as a farmer and forgetting that they have a business to run. And if you contextualize that way, your odds of success tend to go up quite a bit.
Well, it's interesting that you say that, and I'm curious. So if you think about it, they're doing two things at one time, right? They're actually doing the farming and they're running a business at the same time. So I can only imagine what the challenges with time is, and I'm curious how you have been able to work with that, because farmers, as we know, they do not have a short day of work by any stretch of the imagination, and then they have a business to run as well. So how do you overcome that challenge with farmers and their available time to be able to introduce them to your products and get them on board?
For me, and I imagine it's similar for the others here as well, making like it's marketing 101, building a story brand, or however your approach is, addressing their problems and making your value proposition clear in the first sentence of what I can do for you, what I can do for your business, how I can help you. It still doesn't work, like most of the time with any business pitch. But the reality is like that, having those reps in and continuously, being hyper focused on this idea of the customer's problem has to be front and center in the business, so that we're actually solving something for them and for their business.
Alex, do you see that, because you're working directly with the farmers and their finance, their I want to say personal finance, but they're also their business finance directly? Do you see a challenge in getting the bandwidth to be able to do all the work that you need to do with them?
So I would imagine part of the way we solve this is the same way Carter and Scott do, of how do you identify that moment in which the farmer's problem is super critical and solve it for them then. So, for AcreTraders, like the farm across the street just came up for sale. This may only happen once in a generation. Like, how do you help them capitalize on that immediately? For Scott, it's like, they need to get a loan. It needs to come through in the next X number of days, or they run out of cash. And how do you solve the problem then? And then for us, it's, when we use the grant deadlines a lot to get farmers to like, hey, you've got like 2 weeks to submit this, or you have to wait a whole other year. And then the other big one for us is tax season, of like, hey, April 30th is coming up. Like, do you have your books in order? Do you want us to like come help you with this? So I think that's one. And then the other one is just like, and this is just basic tech stuff. Like, don't ask your customer to do that much work. We made a very clear choice to be more of a tech-enabled services company rather than a pure software company. So rather than saying like, here, farmer, here's like some software, like please spend an hour every day like typing stuff in, because we're not going to do that. Like, no one wants to do that. We say like, hey, farmer, like here is Alan, who's on our team. Like Alan's just going to do this for you. And what the farmer doesn't see is like Alan is wrangling the software on their behalf for them. So some of it's just like good design choices too. It's not ag specific. That's any tech company.
Scott, do you see any time challenges that you encounter?
Yeah, we just want to, they are, like you said, they have long days. They're out in the field, so you got to be respectful of their time, like any business person. Give them clear ROI, definitely value prop. Like, if you can tell they're busy, hang up. Say, look, let me call you back. Call me back when you get a shot. I think too, what we have to realize, and frankly, some in the past, like a lot of the field-based and precision ag-based companies have come in, and they haven't realized that, like, I don't remember if Carter or Alex said, farmers on crop farming, you get one shot at revenue a year. If you're cattle and livestock, you have a few shots because you're selling and buying cattle more than once a year probably. But there's a lot of anxiety, and it's not just cash flow management. We call it the crop financial cycle. It is cash flow. It is, am I going to make it? And there's unknown pricing for me coming ahead, because I don't know what weather is going to do to the markets. Just this past Friday, markets dropped precipitously because the USDA changed their yield on corn. So farmers have to try to get ahead of these things, but sometimes it's impossible. So just have to be really open and flexible and building a relationship. I mean, I led a sales team in an AgTech company where I said, look, throw the scripts away. We're not doing that. We're not gonna do the corporate thing. Like, you get to know your farmers. They're going to sell their grain eventually. It's not going to be today. You have no control over that. It's all price driven. So you got to respect what they do and that they know what they're doing, and just build a relationship. Eventually they're going to come to you. Of course, you have to have a good product and a value prop. So you want to support that with attending to their overall needs.
Scott, we talked about, where AgTech is right now and FinTech in that, and we talked about some of the challenges. What do you see coming in the future? I mean, we're talking about all the innovation that these guys do and you guys do, and it's exciting to hear about what we could look forward to.
Yeah, what I see is a former fractional CFO and someone who spent a lot of time helping move data from the farmer to the bank and helping in that regard. I see smart loans. I see continuous data driving supporting credit decisions. So a credit decision that's formerly one time a year can now be, you can get a precursor, you can do alternative adjudication, start seeing trends. And so you make loan decisions at, in stages. And it's like I could say it's bespoke lending. You can actually put a farmer who is subject to weather and prices, instead of putting them in a construct of a 12-month loan. This farmer might be on a 15-month tenor while this guy's on a 9-month tenor. The data will show you when to do that with farmers. And the smart loans will show you where can we add value to their operation by loaning them money so they can reduce risk. Like, maybe this farmer has too much exposure to the energy markets because he buys a lot of diesel fuel, but he doesn't have enough storage on his farm to store the diesel fuel, so he can't buy it in bulk when it's seasonally low. So those are the types of things that we're putting together. The second thing, and I've actually been approached recently about this, is education. Like, instead of trying to sit down and explain to a farmer how to do a balance sheet or having him fill out an Excel template, you can actually just park some educational tools inside product delivery, and then kind of I call them bumper lanes at the bowling alley. Instead of the farmer bowling without bumpers, he's got bumpers, and it kind of keeps him in the financial covenants or the borrowing base or whatever he's doing. So I think that's the future. And plus you've got AI guiding all that. And that's what, machine learning. And then another thing that is kind of old hat now, but not talked about much, is there's still opportunities to do ledger, blockchain and ledger-based supply chain stuff in agriculture that just AI has kind of overcome that, that modern, discussion. So there's still some potential in blockchain.
What about with AcreTrader? What do you see in the future?
So I think improved access to capital is a big one. And through the innovation that these three companies on the call here, as well as many others in our industry, are all working on, improved access to capital is a big deal, right? And historically, for most folks in our industry, that access to capital was a local banker. And if you're lucky, maybe there's 2 in your area, or 3 or 4 in a really big farming area. So optionality for your money is an important one, or access to capital. Access to data is another big one. And what I mean by that is I could ask my dad, hey, that 40 acres that you own right there, that is a material asset to you, do you know what that's worth? And he will say, absolutely, I do, plus or minus about 30%. And so having a good sense of what of the information out there to be able to actually value this primary asset for so many American farmers is a really big deal. So that's really where we are focused as a company, is providing access to capital through AcreTrader, providing access to information and transparency around land value through our acres.com platform.
Thank you. Alex, what about yourself?
So we are really focused on the digital transformation on the farm, because a lot of these technologies like autonomy and visual AI and IoT are, finally getting to agriculture. And so farmers just have the amazing data streams that they didn't used to have. So one, we're focused on helping that smaller farmer take advantage of these things, because right now, it makes sense. These things are designed for bigger farmers with more scale to spread that fixed cost over. But the other thing I think is going to get more important is just like the role of the intuition of the farmer, because they're going to have all of this data and insight coming to them. But I am a little bit skeptical that we are ever going to get to a point where we can have like a true digital twin of the farm where like the algorithm can tell you this is going to be the best thing. Like there's just too many variables in agriculture and too much difference between farms. And so I think it's going to be something like what you're seeing in med tech where, doctors are getting all these cool new tools, but it's really, it's the doctor's intuition that helps like parse all these things out. I think it's going to be something similar of like, how do we equip our farmer to, they know their own land best, and how do we equip them to make the best decisions they can?
Awesome. So I am out of questions myself, but we did get a question from the audience that I wanted to ask you guys. And if anybody else has any other questions, feel free to put it into either the chat or the QA box. But the one question I had was, what forms do the banks use to underwrite ag loans? Are they tax forms, subschedules, or Excel worksheets? Is there anybody who'd like to take a stab at this?
Well, yeah, I will. They get tax forms. There's a certain schedule that the IRS uses for farms and ranches. So that is part of the holistic tax reporting. There are balance sheets and personal financial statements. A lot of farmers own land personally, but their farming is a business, and the farm rents from the personal landowner. So there's those things, and yes, cash flows are asked for a lot of times, but this is where there's opportunity for disruption. Where you're onboarding farmers much easier, because filling out forms, like Alex alluded to, they want to farm. It's not something they relish. They know they have to do it, but if you can remove the pain points, that's important. So I did see a bank, a very large ag bank. I went to their website and I clicked a button that said "Start here" as a farmer looking for a loan. I'm not kidding. They presented a 5-tab spreadsheet with at least 2,000 data points for the farmer to enter. It had a cash flow, a balance sheet with 10 schedules, plus the loan application. Okay. Like, I'm sorry, not many people, let alone farmers, are going to do that before they go get a loan. So we've got to put new frameworks together to provide them to eliminate a lot of these forms. But that's the forms that are used now.
For some broader context for the group here, of the loan application packages that you've seen, what percentage of them in today's market include like actual forms being like paper?
Oh, like that's still a large. It's still a large percentage that are paper or fillable PDF. That's some smaller banks' answers to, let's build a digitized version of a loan application. But if I put a number on it, I'd say, well, so my own data, I'll just answer with my own survey, Carter. Like, we did a survey of banks, over 150 banks over the last 2.5 years. And we asked, how many farmers bring a good loan application and a budget to you with a break-even cost of production and a crop marketing plan? And it's 26%. So according to their own bankers. So I think from the flip side, it's a high percentage of, still traditional loan application process. I would say well over 50%.
Question. And I'm going to read this verbatim. Sean talked about a culture of innovation among farmers. Scott mentioned the uniqueness of the adoption curve in this space. Carter mentioned the importance of a story brand and addressing the customer's problem quickly. Even diffusion of innovation theory got its start in AgTech in the 40s. So how much does your marketing have to rely on word of mouth after the first implementation?
That's huge. And I've read about that diffusion theory starting in ag. I find it really interesting. I can't remember. I think it was Tennessee, University of Tennessee economist. But anyway, nevertheless, word of mouth is huge in this business. It's the farmers meet at coffee shops during the wintertime. When you have high anxiety from high risk, which all farmers share, okay, because of what we alluded to earlier with commodity price fluctuation, weather issues, like many of those things are out of their control. So they have a common bond in that. So that just enables you to, if you build them a good product, it will spread like wildfire. So I hope I'm not being too sophomoric with that answer, but it's absolutely true.
I would invert that and say there is incredible brand risk as well, right?
Yeah, that's true.
We've seen some brands with great products disappear because on one forum somebody felt mistreated by them. So reputation is like we can't state enough within this industry how important the reputation of the business and that it is doing the right thing. Just
Absolutely.
Being successful.
Yeah, a lot of business is done on a handshake still, and that's hard for us to hear in the financial world, but it's very true in some ways. A bank won't let that happen, but these guys have relationships. These ladies have relationships. It's generational. People have been doing business together. And I actually had a bank that's helping us test our MVP right now, just told us the other day, hey, we like it when we see that a farmer has been buying from that same guy or same gal for 15 years, because it shows they pay them back every year. So, and so we can't always measure that, but that's where data and the fintech world can come in and make immediate impact. We can now quantify the relationships with data and indexing and data science to show the outcomes that actually have quantifiable decision-making ability.
A question that was specific to you, but I'd love to hear from Alex and Carter as well. The question is, how can we speed up farmer adoption where no broadband exists to connect the farmers' equipment to the internet?
That's a great question. So showing them like that their equipment that they love is, like Alex said, is giant IoT devices. So a combine to cut the corn and harvest the corn and the soybeans and the wheat, some of these cost upwards of $1 million. So very expensive pieces of equipment that are connected to the cloud constantly. So leveraging that, showing them how they can leverage that. And it's an indirect ROI. Well, it's the direct ROI in those equipment is the yield of the corn. How much do we produce? The indirect ROI that, like we talked about, what all three of us have alluded to, is how does that flow through to the financial metric? So when you got companies like John Deere, which if you watch CNBC has been one of the most popularly traded equities in the last 10 years, and it's gone from like $60 a share to $458. And then you got SpaceX, which is leading us into space. Literally, they came together this week and announced a deal where their Starlink, where SpaceX's Starlink satellite service is going to be put into the United States and Brazil. That broadband infrastructure is going up, and the USDA, the government of the United States, has rural business initiatives to support that. Like, you literally have 5G on the farm where there's nowhere the farm data won't be connected. So like that's where we're headed.
Alex or Carter? All right, we've got another question. So go ahead, Carter. I'm sorry.
Scott nailed the points there. It was good.
So how are fundraising and equity discussions different in one of the most federally subsidized industries in the United States? Does anybody want to take a stab at that?
Carter's raised the most money. He needs to talk about that.
So as a business, I speak to both as our business and then also for the farmer, right? So within our business, that's not really part of what we do at all, right? So we work in the world of land, and the other folks on the phone here as well work in the world of ag finance. So a farmer, when we talk about subsidies, which we don't technically subsidize the farmer due to trade organizations, what we do as a government is help backstop them in case of various catastrophes, help them get off the ground if they're very young or very small farmers, and then help to insure their business effectively. As I think we can all agree from a policy standpoint, ensuring that our food continues to grow and that our farmers don't go out of business is important. For our business in the world of raising equity, both for our company and for land, however, those things do not really enter the equation, other than there is some comfort provided to know that the business partner you're in business with, the farmer, if they are a good business person, this is still important, they can still absolutely go out of business, right? Farmers absolutely have bad years, they can have bad years financially, and they cannot succeed. But it is still a nice to have in the industry to know that, hey, as a country, we are backing farmers out here. We understand that this is a volatile, it's commodity production, right? It is a volatile industry. And so it is important for us as business partners, as farmers, to have that basic understanding.
Yeah, I'll add to that too. So I love the question. If you're, subsidization of farms is vital. We'll leave out the government program conversation. I mean, some things are very good. Some things are pork barrel spending. We don't know. But in ag, like Carter alluded to, it can be wildly profitable and it can be wildly unprofitable. And so the volatility that happens in this industry, AgTech can help smooth it out. And what it's doing in governments is it's helping governments are actually using data from AgTech to help reduce subsidies and be pinpointing on spending. So for instance, in the Lake Erie watershed of the I-states in Ohio, a couple of years ago, the government, through the risk management agency who administers the federally subsidized crop insurance program, they put out a program for corn producing farms to show and share data with their insurance agent about the amount of nitrogen that they used. So if they could prove that they had reduced their amount of nitrogen use through precision agriculture and using data, then they could receive a lower premium rates on their corn insurance. Because obviously, to keep water from having excessive nitrogen runoff into Lake Erie. So these are the sorts of things that we're able to use. And like Alex was alluding to, the good agriculture, we want to sustainably produce these crops. Farmers want to be sustainable and they want to be efficient. And so AgTech, which is the topic of today, we can really, the governments or even our governments even using that to help motivate farmers to be very efficient with the technology and for that outcome to be a healthier and more sustainable production environment for everybody.
I would like to add to this one, just having been in the middle of a lot of these government programs and helping farmers apply to them. There's a little bit of a dynamic where the core of government ag policy is very innovation, discouraging. So it, like the way the crop insurance program works, for example, is it really encourages farmers to follow kind of like the recipe for like how, the last 10, 20 years, like folks have grown these things and to, not diversify what they're growing, not like try crazy things, et cetera. Because if the farmer innovates too much, then suddenly they can't get crop insurance, which means then they can't go to the bank and like get a loan because now they're not insured. So it's easy for them to just like go bust. And so then other parts of USDA will come in with these other programs, like what he's saying at Lake Erie. You're like, okay, we're going to make these like targeted improvements, but it's almost like it's like canceling each other out because the core of the policy is still, it moves at the speed of government. And so it just doesn't catch up with the innovation. Like one thing we work with a lot is help farmers adopt rotational grazing, where basically you move your cattle or your livestock around every day. And it's great for a lot of environmental reasons. And there's this new innovative company that does basically electric fence for cattle. So instead of having to like physically put out a gazillion little pieces of cross fence, you can just have an electric fence and digitally move it every day. But if you want to get conservation money to adopt rotational grazing, you can't use it for the electric fence because it's not approved yet. It's probably going to take like 5 to 10 years to like get through all the bureaucracy to get approved. So you still have to like go out and like buy all this physical fence. So in some ways, the ag being a very regulated industry does make innovation a lot harder. That's my soapbox. I'll get off of it.
Well,
and actually, this relates to. Go ahead, Scott.
No, you finish your thought.
Well, and I just noticed we had another question in the chat about, learning from Israeli farmers, especially like farming in arid areas. And I do think, government policy is a lot of the reason why there's not as much adoption of good practices from other countries, or like not as much cross-pollination, because every country's got its own set of ag regulations. And part of farmers adapting to their context is unfortunately adapting to their own government policy context.
Yeah. And the innovation too. Like there are private companies that are building like parametric based risk models for crop insurance. So you can buy those as a supportive or as an accentuating risk management device. And then you have also, AI based commodity trading models that will show the farmer how to hedge and be very, sell crops and hedge risk more profitably. So some pretty cool stuff there too, as far as risk goes.
Yeah, I would love it if RMA would adopt some of those models, but that's, they'll adopt today's models like 50 years from now.
Yeah, they're pretty slow for sure.
In the interest of time, I wanted to bring one more question up, and the question was brought up: if someone, are there forums, associations, or groups that FinTech's should join to be able to reach farmers?
So I guess I'll take a stab at this. Nobody's jumping on this. There are industry organizations such as the Corn Growers Association, the National Soybean Association. That's a good way to. These groups represent producers in Washington, so that's an outlet. Social media. Farmers are very, they use Facebook and Twitter a lot, and so that's a good outlet to reach them for sure. So, they're spread out around the country. So you want to go to those industry associations or to social media to kind of get that aggregate there. So, I could probably talk on and on about the various organizations, but one of the best bets is to go to the farmer sponsored groups like the National Corn Growers and the National Cotton Council, et cetera.
Well, excellent. Well, listen, I wanted to thank Alex, Carter, Scott, everyone for an informative discussion. And thanks to everybody who joined us today. As a reminder, the recording of today's session will be available soon on the NFO's YouTube channel. Make sure you join us for the next presentation in NFO's Growth Garage. Details and registration will be available soon on the NFO website at nationalfintech.org. Thanks again for joining us, everyone, and have a great day.
Thank you, Sean. Thanks, everybody.